Hey, what's going on, everybody? Today we're talking plug power, ticker symbol PLUG. As a disclaimer, this is not investment advice. It is just a research video that I put together meant to be educational as well as entertaining. I have a small position with plug power. I'm going to drop you into a few different news clippings and articles surrounding the company and some recent activity involving the company. And then we're going to take a look at its stock. Please like, share, and subscribe. Enjoy.
Okay.
Plug Power's been an exciting stock for a long time. It's had its ups and its downs. Is that era now over, Andy, given these two acquisitions and the base of clients that want hydrogen fuel cells?
Well, Jim, when I take a step back, during this recent pandemic, 25% of retail food in the United States moved through Plug Power's products. And many of the internet home retail that people have received came through Plug Power's products. So as you mentioned in your introduction, this is a real company with real business. The acquisitions actually completes the complete total system solution we bring customers. So for Amazon, we built the hydrogen stations. We provide the fuel cells. We provide the aftermarket service. And now we can provide them green hydrogen.
All right, so let's talk about that. You have said and committed in all of your publications that you will never do anything but green, that is just the way of the world for you. Why is this the cleanest fuel?
You know, when you think about green hydrogen, you have to think about the feedstock. And I think people understand clearly, if you take solar, you take wind, if you take hydropower, and you combine it with Plug Power's electrolyzers, the output's green hydrogen with zero carbon footprint. And Jim, we're not doing this because, we're doing this because our customers told us they want green solutions. And this is how we went about solving the problem they put in front of us.
All right, so Elon Musk, who is revered in this country, at least in the stock market part of the country, famously called you that this is fool cells, not fuel cells. So why should I believe you over Elon Musk?
I think Elon Musk has done some of the coolest things in the world. Landing a rocket in the middle of the ocean, building Tesla. But when you start thinking about why batteries don't work, especially for commercial vehicles long term, especially things like Class 3 to Class 8 trucks, fuel cells are 1/10 the size and much lighter. So, as DHL told me, do they want to be carrying batteries around in their delivery vans, or do they want to be delivering packages? So I listen to DHL, people buy products, but I got to tell you, I'm hoping one day Mr. Musk buys from Plug Power, because we'd be happy to work.
Let's see what Mr. Musk has to say about hydrogen fuel cell energy and its capabilities.
I don't want to turn this into a debate on hydrogen fuel cells, because I just think that they're extremely silly. And the people have published, there's multiple sort of rebuttals of it online. It's just very difficult to make hydrogen and store it and use it in a car. Hydrogen is an energy storage mechanism. It's not a source of energy. So you have to get that hydrogen from somewhere. If you get that hydrogen from water, so you're splitting H2O, the electrolysis is extremely inefficient as an energy process. If you say took a solar panel and use the energy from that solar panel to just charge a battery pack directly, compared to try to split water, take the hydrogen, dump the oxygen, compress the hydrogen to an extremely high pressure or liquefy it, and then put it in a car and run a fuel cell, it is about half the efficiency. It's terrible. So why would you do that? It makes no sense. And then hydrogen has very low density. It's a pernicious molecule, likes to get all over the place. You get metal embrittlement from hydrogen. If you get a hydrogen leak, it's an invisible gas. You can't even tell that it's leaking. but then it's extremely flammable when it does and has an invisible flame. If you're going to pick an energy storage mechanism, hydrogen is an incredibly dumb one to pick. You should just pick methane. That's much, much easier, or propane.
Okay, well, obviously Elon Musk is a firm believer in battery power. However, I think that the two, Plug Power and Tesla, can coexist in the futuristic, perfect world. I'm going to drop you into this Plug Power video clipping highlighting some benefits of alternative energy.
This here is an aerial view of the city of Beijing, China. And this is probably taken late 2019. And you can see that view from space, looking down on Beijing. It's not exactly clear. There is a lot of stuff in the air, whether you call it smoke, smog, industrial waste, whatever it is, it's obvious that this is not clear. And this is probably normal for that city. And there are a lot of other cities in the world that are like this. But I want to show you something that happened late in 2019, early 2020, when the coronavirus hit. Everything changed. Industry started to shut down because people were sick and they had to stop the pandemic. People stopped driving in cars. This is that same aerial view earlier this year. And that is incredible to see the progress that can happen when those internal combustion engines are not polluting our air. So this right here is a vision of what can happen with clean energy when that stuff is not going up into the air, when the only exhaust or waste is water and air. This could make a huge difference for our planet. Do you agree?
I agree. I'm going to put you into this article from the Motley Fool, Why Plug Power Stock Plunged 10% this morning. This article is taken from August 12th, and I'm making this video August 14th, August 15th. It's already 2 in the morning, Texas time. What happened? Shares of Plug Power tumbled more than 10% this morning and remained down 8.3% as of 9:50 a.m. after the company announced last night that it will sell as many as 35.3 million new shares of stock to raise cash. So what? On the one hand, at a price of $10.25 per share, the offering holds the potential to raise more than $360 million in cash. That's good news because when the offering was initially announced, just a few hours before it was priced, Plug was thinking that it might raise only $345 million. It's bad news for existing shareholders, however, because the addition of 35.3 million new shares to Plug's already 363.6 million shares outstanding will dilute Plug's current owners out of about 8.8% of their ownership stake, a number not coincidentally close to Plug's percentage decline today. But really, what choice did the company have? In its entire 23-year history, Plug Power stock has never earned a full year profit. It's never generated a penny of free cash flow either. And when a company can't generate cash flow from selling products, but can raise cash from selling stock, well, that may seem like a reasonable solution to its cash flow problem. So, to sum it up, the company diluted their shares to raise some cash to help out the company long term, perhaps. I'm going to put us into a video highlighting the nuances of Tesla and Plug Power.
Hydrogen fuel cells have been a technology of great promise, as well as great skepticism. Elon Musk himself often mocks hydrogen fuel cell technology, going so far as to call them fool cells and mind-bogglingly stupid. But major automakers still see promise. First, let's define the terms. Battery electric vehicles, or BEVs, are the electric vehicles that most of us are familiar with today, like Teslas. They use a battery to store electricity and power the electric motor. A hydrogen fuel cell electric vehicle, or FCEV, like Toyota's Mirai, combines hydrogen with oxygen to produce electricity, which then powers the electric motor that drives the car. Now, when it comes to why people don't buy battery electric vehicles like Teslas, there are 3 main reasons. They take too long to recharge, they have a limited range before they need to be recharged, and they cost a lot more than your comparable gas-powered car. So, how do hydrogen cars stack up in these areas? When it comes to recharging, hydrogen cars have battery electrics beat. At a supercharging station, A Tesla can charge anywhere from 30% to 50% in 15 minutes, but you'll be at the charging station for over an hour for a full charge. Fuel cell vehicles don't require charging at all. The hydrogen tank is refilled at a hydrogen station in less than 5 minutes, just like your typical gas station today. That's because FCEVs don't store electricity like a battery. They create it on demand to power the motor. When it comes to range, hydrogen-powered cars seem to come out on top again. Between the 3 fuel cell vehicles on the road today, they have a range of 312, 360, and 380 miles. Most electric vehicles have a range under 250 miles. While some Tesla models offer a range of more than 300 miles, they often cost more than the average car buyer can afford. Range and refueling times are so important that 78% of automotive executives believe fuel cell vehicles will be the breakthrough for electric mobility. But that's not to say fuel cell vehicles don't have challenges of their own. FCEVs need more competitive pricing. The suggested retail price for the fuel cell vehicles available today is around $60,000, which is about $20,000 more than an entry-level BEV. That's because production size of these vehicles is incredibly low. With only a few thousand or few hundred being made every year, it's nearly impossible for prices to be competitive. But that could soon be changing. Automakers are looking to increase the production of their FCEVs. Toyota, in particular, has increased its production capabilities tenfold to eventually bring down the cost of its Mirai. The real challenge for hydrogen fuel cells is the lack of infrastructure. In the US, the majority of hydrogen stations are in California, with just over 40 available to fuel cell owners. For FCEVs to become the breakthrough that automotive executives believe in, a vast network for hydrogen stations is vital, and automakers are slowly working to make it happen.
We do get to work together with the other automakers, as well as with, here in California, the state of California and the industrial gas suppliers or whomever the energy provider is, to be able to site hydrogen stations where it makes the most sense for all of the automakers' vehicles. And so that's to try to make sure that any investment that we make is best leveraged by all of the consumers from all of the automakers that currently offer fuel cell vehicles.
If and when fuel cell vehicles scale, Tesla will have a tough challenge on their hands. They'll have to increase range while simultaneously decreasing recharging time and price. But Teslas, and any battery electric vehicles, are limited because of the law of diminishing returns. Increasing the range requires a larger battery. A larger battery will add more weight to the car. After a certain point, the added weight no longer yields additional range. With FCEVs, it's just a numbers game. More hydrogen stations equal more cars, and more cars equal more affordable fuel cell vehicles. Tesla has a lock on the zero emissions market in America, controlling a whopping 60% of the EV market. But that's still only 2% of the entire US car market. And those numbers decrease when we talk about the global car market. The only thing really holding FCEVs back is infrastructure. And as hydrogen stations become more abundant, Tesla could lose the majority of the zero emissions market.
A little side-by-side comparison between Plug and Tesla stock. We see here at the 3-month and the 6-month time frame, Plug Power has outperformed Tesla stock 134 to 88%. However, when we get to the year-to-date time frame, we notice that Tesla overtakes the performance and just says bye-bye. Tesla has been just a crazy stock. It's been a beast of a stock. I think a lot of things are already priced in for Tesla, at least thus far. And with the share and the stock split that it announced, it just added fuel to the fire. A lot of people are running into this stock. However, Plug doesn't help itself when it dilutes its shares, at least in my opinion. And since these companies have been in the news lately going at each other, I think it's safe to compare them. I'm going to put us into the 3-month trading window in my trading view. I'm going to make a level of resistance in the high 11s, low 12s. Around $12 will be, at least for me, my new level of resistance. Meaning that if it can break out of this level, then I see some good health in the stock. And as I was taught, past levels of resistance become new levels of support, which we'll see right here. I'm going to make and highlight some levels of support from mid to late June all the way to where we're currently at, and I'm noticing a stair-stepping pattern of ascension, and the stock traded a little bit sideways for a while. There was some news about the dilution of shares most recently, which is what I believe is responsible for what I'm going to highlight right here. So this most recent level of support around the 10s at one point was the level of resistance, which I'm highlighting right now. So a past level of resistance becomes a future level of support. So I think that it's healthy for the stock whenever this happens. And I was taught that whenever I'm seeing this, okay, that the news and everything surrounding the company is reacting and inversely reacting with the stock price and the activity. So I do notice a stair-stepping pattern of ascension, that it is going in an upward trend, and it just touches that resistance and it goes back down. It trades, it wants a pop, it hits some resistance, and it comes back to its support. So I don't think that, well, anything can happen, right? Anything can happen with the stock. It can go any way. But I think if it gets above this level of resistance, then I think we could see some healthy signs from this company. I want to see this company exist and grow, and I think you should too. I think it's a cool company.
Number one rule of Wall Street: nobody, I don't care if you're Warren Buffett or if you're Jimmy Buffett, nobody knows if the stock is going to go up, down, sideways, or in fucking circles. Least of all stockbrokers. Right? It's all a fugazi. You know what a fugazi is?
No, fugazi. It's a fake.
Yeah, fugazi, it's a wazi, it's a woozy, it's a fairy dust. It doesn't exist. It's never landed. It is no matter. It's not on the elemental chart. It's not fucking real.
Right.
All right? Right. Stay with me. Mm-hmm. We don't create shit. We don't build anything.
No.
So if you got a client who bought stock at 8 and it now sits at 16 and he's all fucking happy, he wants to cash in, liquidate, take his fucking money and run home, you don't let him do that.
Okay.
Because that would make it real.
Right.
All right, I'm going to leave it here. Thank you for your time. I really appreciate it. Please continue to like, share, and subscribe. Hit that notification bell. I really appreciate it. It helps the channel out a lot. Take care of yourselves. Please stay safe. If there's another company that you'd like me to research, let me know in the comment section below. All right. See y'all in the next one.